Hello, you're watching Dukascopy TV. Today is supposed to be the day where officials vote on the first stage of creating a banking union in Europe. On Wednesday, EC President Manuel Barroso announced that a full economic recovery was in sight, but Europe mustn't take anything for granted. Well, logical words may be, but is a banking union the best method to protect banks against a future financial crisis in the EU? Joining me on the line is Fredrik Erixon, Director of Research at the European Centre for International Political Economy. Fredrik, thanks for joining me today. First off, what are you expecting to happen with the vote, and do you think all parties involved are ready to agree on a bank supervisor?
Well, I think almost all parties, or all party groups in the European Parliament, they stand behind the idea of a single supervisor of large systemic banks in Europe. I think a lot of people in the European Parliament would like to go even further and expand the net of centralized supervisory power on the part of the European Union. The issue that has complicated this process in the European Parliament concerns the accountability of the European Central Bank, who's going to manage this new surveillance system. And I think there are lots of people in the European Parliament that still have concerns about insufficient accountability standards on the part of the ECB, not only for what they're going to do in terms of surveilling banks, but also accountability in terms of getting clearly defined separations between whatever they're going to do on financial supervision and the running of monetary policy in the EU, as they already do. But my hunch is basically that the European Parliament is going to support it, and they're going to do it fairly soon, because they also think that time is of essence here. If they stall, if they delay, they fear that the process might peter out and nothing will happen.
You mentioned accountability there. Who would be the preferred choice then to oversee a banking union from an independent and impartial viewpoint?
I mean, I would say it's a perfectly normal and a perfectly legitimate question to ask on the part of a parliament in what form this accountability will take. And we've, of course, also seen comments from the ECB President Mario Draghi in the past year acknowledging the fact that when they now take on new powers, there will, of course, have to be new measures of accountability as well. The situation right now is that central banks across the world has become perhaps the most influential and most important arm of a government. In Europe, in the United States, in the UK and elsewhere, in Japan now, we have, of course, seen the increasing role played by central banks in trying to, in the first place, trying to counter an economic decline, and in the second place, trying to engineer a recovery. And the greater the role of these institutions will be, the more they will have to accept to subject themselves to different sort of democratic controls. This has been possible in almost every member state in the European Union, in many other countries too. You can have a system where you have central banks running independent monetary policy, but at some point elected representatives have to make the decisions about the frameworks and the control.
There's been a lot of talk that banking union plans have stalled due to the upcoming elections in Germany. We could see even further delays to a system Mr. Barroso says is essential for the future smooth running of the EU financial sector, couldn't we? Yes,
in the sense delay the process of the banking union, but no, in the sense not delaying the establishment of this new supervisory mechanism, which seems generally reckoned to be the first part in creating a banking union. Germany, of course, was the country that came up with this idea of creating much greater centralized surveillance of banks, and that this new supervisory mechanism was going to be housed at the European Central Bank. What we've seen later, of course, is skepticism on the part of many in Germany, especially economists and people at the Bundesbank, which fear that this new role for the ECB may corrupt the inflation targeting monetary policy of the ECB, that you cannot really find such a distinct division between running monetary policy and running a financial surveillance policy, as many people presume. But still, Germany is behind creating this new mechanism and has voted in favor of it in the Council. So I don't think the election in itself is going to delay that, for the simple reason that the major parties in Germany, they stand behind it. The main question about the German election is, to what extent will a new government get a mandate from the electorates to actually move forward to other instances, to other elements of this banking union that has been talked about.
What about the possibility of corrupt institutions in some European member states? Isn't there a risk where banks who have a large number of non-domestic deposits and are at risk of being bailed out or bailed in will form a large chunk of the union if or when it's up and running?
Well, I mean, I really don't see this to become a new sort of problem. I mean, this is a problem that already exists today when you have individual governments or individual central banks that are effectively faced with a choice about rescuing entire banks or entire banking systems or rescuing none of them. And I don't think we're going to see a change now in the sense that the ECB or anyone else will come up with intelligent ways to try to distinguish between the domicile of particular residents and whether that can have an effect on a rescue operation or not. The premise here, and which I think is the important part, is that when you talk about financial supervision and when you talk about the sort of authorization that a supervisory mechanism can give to bank rescue operation, the main premise is that you cannot have a system targeting individual banks. You cannot run a system which is based on the premise that if you make every bank safe, the entire banking system is safe. The problem here is that even if you make individual banks safe, you may still risk systemic banking crisis, for the simple reason that what you want to control is the interdependency and the connections between individual banks and larger credit market, larger money market developments overall. And I don't really see how, in an atmosphere like that you can make clever distinctions between the residential status of different depositors and make intelligent distinctions when you're preparing for bank rescue operations. Either you're trying to save the bank entirely or you let it go down, and that's the choice that regulators as well as politicians are going to face.
Okay, very briefly, Fredrik, just before we finish, the banking union, do you think it will be a help or a hindrance?
Well, I certainly think it's a step in the right direction. I mean, the new surveillance mechanism itself is alone not going to have any form of strong impact on the stability of the European banking system. It's not that you're going to add something new to what already has been done. I think the main things the most crucial part for the banking union will be when you come to questions about what are going to happen when an entire banking system is faced with perhaps collapse. Who is then going to step in to save these banks, or who is going to make the decisions whether to save them or whether they're going to go down? And until we have an idea how that's going to be run in Europe in future, and consequently who is going to pay for it in the event that they come up with the idea that there should be some sort of joint liability between governments for banking institutions, until that happens, there will still be large confusions about the institutional arrangement in Europe and what will happen when a new crisis going to hit.
That's all we've got time for today. Thanks very much for joining me, and I'll see you again next time. Goodbye.